and it all comes down to one game.
Assalamualaikum warahmatullahi wabarakatuh. My name is Azim Rafi bin Yazid, and today I will present to you for the question A, which is it requires us to calculate for the goodwill in the subsidiary, which is for the Rose Berhad. So first we need to calculate for the consideration transfer in cash, which is 500 million, and next we need to calculate for the cost of transfer on the investment that has been made, which is 240 million times 2.1, which is we got 504 million. And for the NCI, we are using the fair value method. So 2.1 times 0.4 times 80 million, we got 672 million. So we clear all the figure and we got 1,676 million. Next, we need to calculate for the fair value of net asset on subsidiary on date of acquisition. So the ordinary share capital, which is amounting to 800 million, and for the retained earning at date of acquisition is amounting 245 million. General reserve is 52 million, and for the ARR we got 120 million. In this question, we got for the ARR for the land and the building. So for the land is 2.4 million and the building is 5.5 million, and we calculate all the figure, we got 1,224.9 million. So we need to subtract this amount with the amount that we calculate earlier, which is we get, and from there we will get the goodwill at date of acquisition, which is amounting to 451.1 million. And in this question, they stated that there has been an impairment amounting to 10%. So we deduct the impairment and we get the goodwill for the year ended amounting to 405.99 million. Next, we move on to question B, which is require us to calculate gain or loss on the virtual sale of ordinary of Rose Berhad. So first, we need to find the fair value of the previously interest, which is amounting to 504 million. And next, we need to find the cost of investment, which is amounting to 300 million, which is we need to subtract it in the next step. So next, we need to find the share profit for associate, which is we need to find the retained earning on the 1st July 2018, which is amounting to 245 million. And for the retained earning on acquisition of associate, we need to subtract it, amounting to 109 million, and we get the post acquisition profit amounting 136 million, and we need to times with the share profit amounting to 30%, which is we got 40.8 million, and we add with the cost of investment, which is amounting to 300 million, and we got 340 million. And for the fair value of privilege interest, we need to subtract it with the amounting that we get earlier, which is minus 340.8 million, and we got gain on disposal of associate, which is 163.2, and we need to transfer it to the statement of profit or loss.
Assalamualaikum. My name is Muhammad Zunaim bin Arifin, and I will explain question C and question D. Question C asks to calculate the goodwill or bargain purchase on the acquisition of Heaven Berhad as at 1st July 2020. Firstly, we put all the information we got in the question on this format. The consideration transfer is 75 million. Indirect consideration is 252 million, as Joy and Heaven has the indirect relationship, and the NCI is 408 million. NCI amount is calculated using fair value method, which is 48% multiplied by 500 million and multiplied again with 1.7 ringgit. Next, we need to find the fair value of the net asset in subsidiary, which is share capital, pre-retained earning, asset revaluation brand, and other component of equity. All this amount we add together will get 691 million. Then we minus the amount 691 million with 735 million and get the goodwill on the acquisition of Heaven Berhad, which is 44 billion. Okay, for question D, question asks to calculate the goodwill or bargain purchase on the acquisition of Night Berhad ordinary share as of 1 January 2021. Just like the previous question, we put all the information in this table, then we will get the bargain purchase, which is 29.6 million. This amount we will transfer to investment of associate in calculate to get carrying value of investment in Night Berhad. To get the carrying value of investment, we add the cost of investment and the share of profit we get 334.2 million. Then this carrying value amount of 334.2 million will be transferred to SOFP as investment in Night Berhad.
Assalamualaikum, my name is Muhammad Zulfadli Shalihim bin Hamzuddin and I will explain the consolidated statement of profit or loss and other comprehensive income for the year ended 30 June 2021 for Joy Berhad Group. So for the revenue, we total the amount of revenue of Joy Berhad, Rose Berhad and Heaven Berhad. We do have to apportion the amount since the acquisition of the ordinary share was made during the beginning of the accounting year. The total amount of the three company will be minus with 25 million because it was an intercompany transaction between Rose and Joy. Next, for the cost of sale, we total the amount of the three company and then minus with 25 million due to the intercompany transaction. Then we plus with 1 million due to the unrealized profit arise from the intercompany transaction and then minus 2 million arise from unrealized profit from the opening inventory of Joy Berhad. For the investment income, we eliminate the intercompany transaction, which is the dividend paid between the parent and subsidiaries. For gain on disposal, the total we minus with 2.5 million arise from goods sold by Heaven to Rose at a selling price exceeding the carrying value. Then we plus with 163.2 million as the gain on disposal of associate in Rose Berhad. As for the operating costs and finance costs, the amount of 152 million and 7.5 million arise from parent and subsidiaries. And then for the impairment loss, which is goodwill in Rose Berhad, we have to apportion it according to the controlling interest in Rose Berhad. For the amortization, it is the value of the internally generated brand recognized by Rose that have 10 years of useful life. And then for the share of profit of associate in Night Berhad, we calculated by multiplying the profit after tax with the month it become associates and then with the percent of Joy Berhad acquired Night Berhad. For the other comprehensive income, we just add the value as per stated in the question. Next, we go to the profit after tax attributable to the parents as well as NCI. To calculate this, we need to calculate every adjustment for Rose Berhad and Heaven Berhad. Firstly, we begin with the profit after tax of Rose Berhad and then unrealized profit as additional information number 1. Then we minus with under depreciation of building, which is during the acquisition by Joy Berhad. Next, we minus with ordinary share dividend paid from Heaven, and lastly the preference dividend paid to Joy Berhad. Then we get the adjusted profit after tax. So as well as for the Heaven Berhad, we begin with the profit after tax and then we minus the unrealized profit, which is stated in the additional information number 2, and minus with amortization. Then we plus with over depreciation of plant as stated in the additional information number 2, and then we get the adjusted profit after tax. Then we have to apportion it according to the percentage of NCI for each subsidiary. For the profit after tax to NCI for Rose Berhad, we need to plus with the preference share dividend and minus with the impairment of goodwill. Then the balance of the profit after tax after had been distributed to the NCI will be distributed to the shareholders of Joy Berhad. And then we calculate the total comprehensive income attributable to the shareholders of Joy as well as to the NCI.
Assalamualaikum, my name is Muhammad Zudir and I would like to present on consolidated statement of changes in equity for the year ended 30th June 2021 for Joy Berhad Group. Balance brought down of 1st July 2020, the group retained earning is 370.772 million. Group revaluation reserve is 152.06 million. The other components equity 82.2 million, and for the NCI 919.508 million we got from analysis of financial statement. For the profit for the year for parent is 413.85 million and NCI 50.78 million from appropriation of PNL. The acquisition during the year is 408 million for NCI. Indirect consideration transfer for NCI is minus 168 million. Evaluation surplus, we apportion them for parent 7.2 million to NCI 0.8 million. Increase in fair value of investment, we apportion them for parent 2.6 million to NCI 0.4 million. The appropriation of dividend, ordinary dividend paid, we minus them for parent 40 million and NCI 8.4 million. The preference dividend paid, we also minus them for parent 50 million and NCI 24 million. The balance carried down for 30th June 2021 for group retained earning, group revaluation reserve, other components equity and NCI are 694.624 million, 159.26 million, 84.8 million and 1179.09 million respectively. Next, I would like to explain on analysis of financial statement. From the calculation of goodwill, we got NCI value 672 million and 240 million. The retained profit Joy Berhad, opening balance 287.5 million minus impairment of goodwill 27.07 for parent and NCI 18.04 million. Preference share is minus 0.2 million for parent and 0.8 million for NCI. Share of profit from associate 81.27 million for parent only and the total of parent 341.504 million. For asset revaluation reserve Joy Berhad, the beginning balance only for parent 146 million. Retained profit for RUS, the beginning balance 294 million minus at the date of acquisition 245 million and minus OPER 0.22 million. The total are 48.78 million and apportion for parent 29.27 million to NCI 19.51 million. The other components equity of RUS Berhad for opening balance 59 million minus date of acquisition 52 million. We got 7 million to apportion then for parents 4.2 million and NCI 2.8 million. The asset revaluation reserve for RUS for opening balance 138 million minus date of acquisition 127.9 million. We got 10.1 million to apportion them for parent 6.06 million and NCI 4.04 million. The total of 152.06 million, 82.2 million, 370.772 million and 919.508 million transferred to statement of changes in equity.
Hello, my name is Muhammad Firdaus bin Muhammad Yusof. Last question, I will explain about consolidated statement of financial position as at 30th June 2021 for Joy Group Berhad. First of all, we need to rewrite all the related transaction amounts from the previous statement of financial position as at 30th June 2021. Moving to the adjustment of property, plant, equipment, we need to add asset revaluation reserve, which is ARR, surplus on revaluation, and we need to minus depreciation to get the amount of 2,325.46 million. For the investment in Night, we got 334.2 million from the carrying amount of investment in associate Night Berhad that have been explained by Muhammad Zulnahim in question 1D before. For the intangibles, we need to add an internally generated brand which is 15 million and minus depreciation of 1.5 million. For the goodwill, we get the total amount 449.99 from the question 1A and question 1C that have been explained by Azmi Rafi and Muhammad Zunain before. Next, for the current assets, we have inventories, account receivable, bills receivable, bank loan due from Rose Berhad, and cash in transit. For the adjustment inventory, we minus URP inventory and goods that have been sold. For the adjustment of account receivable, we minus 0.5 million from the additional information 1 that state half of the amount was still due from Joy Berhad. For the adjustment of bill receivable, we minus 6 million from the additional information number 4, which is the bill receivable
issued 8 million and need to less 2 million discount. For the adjustment of cash in transit, we less 3 million from the debt state from the additional information number 3. So for the total asset, we got 5,719.65 million. For the equity, we have ordinary share capital issued, 10% preference share capital issued, asset revaluation reserve, other component of equity, NCI, 5% redeemable preference share, and group retained profit. ARR are the component of equity, NCI, and group retained profit we got from the statement of changes in equity that have been explained by Muhammad Izzuddin before. For non-current liabilities, we have 5% debenture, which is 550 million. And current liabilities, we have account payables, bill payables, loan due to John Berhad, loan payable, and accrued interest. For account payable, we minus 0.5 million because invoice is still due from Joy Berhad. Next, for the adjustment of bill payable, we minus 6 million from additional information number 4. So for the total amount of equity and liabilities, we got 5,701, 2.27 million. That's all from us. Thank you for watching.